Well, it's happened. Gold has passed £3,000 an ounce for the first time ever, and experts believe it shows no sign of slowing down. Welcome to the Bullion Advantage, the podcast giving you weekly insights into the economy, key global events and markets, whilst helping you protect and grow your wealth with physical gold. In this episode, we'll be diving into gold's recent records, speaking about how Japanese investors are moving heavily into gold, and we'll have the latest Robbing Rachel Reeves report, where there's rumours of capital gains tax changes in the next November budget. I'm Jake from Direct Bullion, and today I'm joined by Garry, one of the gold specialists at Direct Bullion. Garry, thanks so much for being with me today.
Hi Jake, thanks for having me. Good to be here. Let's get going.
Yeah, let's do it. Garry, I think first question, what is going on with the price of gold at the moment?
Well, it's been, in this market, there's always peaks and troughs. We're seeing a good run, good surge. And it's down to a few different factors, Jake. I'll give you a few. We've got high inflation. For any of our listeners that don't know, that's the general rise in price of goods and services, which is, affecting many countries, definitely of which is England. We've got geopolitical tensions, wars, conflict, makes people nervous about the economy. We've got central banks buying gold around the world at unprecedented levels. 95%, I see a statistic, I think it was yesterday, are purchasing more gold now than ever. And really, Jay, we've got a case of where people are just looking for a safe place to preserve wealth. It's why gold is the, safe haven asset. But it's a place where people are just looking to put money, park it, and make sure that it keeps up or beats inflation, and to make sure that in case of Armageddon, it's still here and it's still holding its intrinsic value.
So would you say what's going on in the world at the moment, or just in general perhaps, is shifting how people view gold, maybe from speculation to real proper wealth protection?
Yeah, look, there's been a real noticeable shift. In the past, many investors have seen gold as something to trade for quick profits. Now, people, including governments, central bank, and the everyday investor, or as they call us, the dumb money, are treating gold as a long-term store of value. It's become less about, can I make money this week buying gold, and more about, how do I protect my savings? How do I protect my nest egg? How do I make sure that inflation is not eroding my portfolio and my purchasing power? Because although if you have £100,000 in the bank, next year it could be worth £102,000. But if inflation's been at 3.5, you've lost money. Now, the money on the screen, the 102,000 hasn't gone down, but your purchasing power has gone down.
Exactly.
So, yeah, I think there has been a real shift. And we used to see gold was more of something that big banks and institutions bought. Now we're seeing, the general person, the normal person protect some of their money in gold.
Yeah, well, that was Morgan Stanley, wasn't it? They are now recommending 20% gold in your portfolio. Yeah,
and it's been creeping up. It was 5, then it was 10. We've got asset managers who are buying gold from us. We've got family offices. We've got IFAs that are directing their clients towards physical gold. You can buy it with an ETF, but physical gold is becoming an increasingly popular choice amongst investors, savers, and everyday buyers. And people are just looking to have money outside of the banking system that they have their own control over, and no one has control over them. Because let's face it, Jake, if the bank have got control of your money, they've got control of you.
They can leverage it, absolutely. Just to dive in quickly on something you mentioned, because I know James mentioned it last week as well. You mentioned an ETF. Yeah. For the viewers that don't know, could you just quickly explain what an ETF is for us?
An ETF, Jake, is an exchange-traded fund. It's basically a fund that tracks the price of a physical asset. Or it tracks the price of something, but in this case, the physical asset being gold. There's good things, the premiums are really small, but at the end of the day, it's still a financial instrument. There's still third-party risk attached. It's still a speculative product in terms of it's directly pegged against who you've got the ETF with. Now, that's not to say that you've got an ETF with Hargreaves Lansdown, they're in a risk of going into liquidation. That's not what I mean. But nevertheless, it's still a financial instrument. It's not the physical product.
Got it. Thanks for clearing that up.
No worries.
With the gold price doing what it is at the moment, would you say this is perhaps the start of a new era for gold, or is it just another short-term surge in the price?
Well, I mean, look, the price has obviously done extremely well this year. Let's not run wild with the suggestion that this happens every year. Of course it doesn't. But, you know, I would say that gold's been, averaging 10 to 12%. An average, of course, is not a guarantee, but it's an average of around 12% per annum. Now, it's been doing that for a while. So, is it the start of a short-term surge? I think it's been on a good run for many years, but at the beginning of this bull market for gold, and there's strong and lasting reasons why the price could continue to rise. Now, we've got the devaluation of currencies, dollar, euro, pound, yen, so on and so forth. We've got debt problems in major countries and economies. We've got spiraling debt in US, we've got spiraling debt in the UK. Can we continue to service this debt, let alone actually start to pay the debt down? Number two is growing distrust in the financial system. Now, we've got customers who try to buy gold through money in the bank. I've had one recently with NatWest, and they simply are a nightmare. They really are. We've been around for a decade. We've serviced hundreds of thousands of customers with millions of pounds in revenue, and we deliver a physical product, Jake. So if we was doing anything untoward, we would have been found out by now. But still, our clients go through rigmarole. They can become a nightmare. And not only that, the kind of Big Brother-esque situation we've got now with digital IDs.
We'll get into that later for sure.
There's a growing distrust, though, isn't there, Jake? I mean, there's a growing distrust in the financial system and the system. So, while prices might go up and down in the short term, the big picture suggests that, gold still remains strong for many years to come.
And you just mentioned a devaluation in a lot of currencies, and you mentioned the Japanese yen. Recently, we've seen a big shift in Japanese investors moving to gold. What do you think has caused this sudden movement into gold in Japan from these investors specifically? Well,
the yen is weakening, which doesn't give great confidence in the country, in the economy. And Japan has very, very low interest rates, which, just for our listeners that are not quite sure, an interest rate is the money you get for parking money in a bank, a bond, so on and so forth. So it's what they incentivize you with. So if the interest rate is low, it means for every 100,000 you've got in the bank, if it not being 3%, your interest rate might be 1%. So it becomes less attractive to keep money in these institutions, in these accounts.
Sure.
With that being lower, people start to look for other alternatives to beat inflation. You've got gold, you've got stocks and shares. There's a plethora of different products that you can use. But with a low interest rate, it just means that people are searching. And, on their search, they find gold. This is what happens. Now, inflation's picking up, which can hurt your cash savings. So if your interest rate is low, and your inflation is high, that means that, we spoke about this earlier, but your purchasing power is going down, even though it doesn't look like it. So it's a stealth tax.
Yes, exactly.
It's not actually being shown on the screen that you're losing money. But for all of our listeners that are older, gentlemen and ladies, I'm sure you guys would have seen that price of shopping per week 20 years ago is a big difference in the bag that you get now.
Well, we were talking about the price of a pint down the pub the other day is getting...
It's ridiculous. It's absolutely
over here in Canary Wharf, we're going to be on £9 a pint very soon, I think.
That's what I mean. Honestly, it's absolutely ludicrous. So people in Japan are just coming to the same kind of conclusion that we are in the West. And we are all around the world. It's why we're seeing record high gold prices. It's why we're seeing record high number of purchasers. Us as a business are getting more customers than ever, more purchases than ever, more different types of customers than ever. Yes, we've brought on some brand ambassadors that's definitely spiked interest in our company, but there's just a general growing interest and demand for gold. And that's just, in my opinion, for us, that's a fact.
Yeah. And when gold is hitting new highs like this, like it is right now, what would you say experts are predicting what could happen next?
Well, look, when gold hits new highs, there's a few common reactions that we can see. Some people buy more. The fear of it going even higher with FOMO, fear of missing out for anyone who didn't know.
Yeah.
Some sell for profits, which is normal.
Of course.
For any market, if it ever just goes up in a straight line towards the right, you need to get out, because there has to be peaks and troughs. It has to happen. People have to take profit.
Of course.
Because otherwise it's not a real market. If you can't sell, it's not a real market.
Yeah.
So people sell for profits, and many investors enter the market on the back of the fear of missing out, and then that brings more attention, which spikes the price, and the cycle continues.
Got it. And before we move on to sort of the current events section of the podcast, if you could give one recommendation to someone who's on the fence right now about buying some gold, what would it be?
Good question. Don't wait for the perfect time. Start small. Build up. Don't have to throw the kitchen sink at it straight away. It's not a market that, this isn't property. The minimum requirement here isn't 300,000 or in London £500,000. We're talking, we've got 1 gram bars, we've got 1 ounce coins for £3,000. You just start with something that's comfortable for you. If you're going to take delivery of it, and you can always buy more. The gold market's not going anywhere. Now, that's not to say that's the best strategy, because, this year you'd have been better off just buying a big lump at the beginning and averaging yourself in, but everyone's strategy is different. You've got to do what works for you. So I would say just get yourself in the market with something that can protect some of your wealth, and think of it as an insurance. You're not buying it to sell it in the next couple of weeks for a quick gain. That's not what gold's for. It's a seatbelt against a financial crash. And it's an insurance against anarchy in the streets. And if we're being honest with each other, Jake, I mean, I've had worse investments than 10% per year as an average.
Yeah, well, exactly. Exactly. I think let's move into the budget prediction part of the podcast. I know we've got the budget coming up. I think we're going to start calling it the Robbing Rachel report. This week, let's talk about capital gains tax. The Chancellor did already raise capital gains tax at the last budget. The lower rate went from 10 to 18%, higher rate from 20 to 24%. These rates could be raised again, or she may consider applying specific rates to certain asset classes, like your second properties, for example. Yeah. What are your budget predictions, and what do you see happening to capital gains tax?
So what we're seeing a lot at the moment is the amount that you can take out of your pension tax-free. There's been, it's all speculation at this point, but we've seen it as low as, they say, 25,000. So what we're getting, a lot of current clients of ours drawing down on their pension from elsewhere in the gold market, wherever, and buying physical gold with it. So, I mean, I can't, nothing is impossible at this point.
No.
Because, I mean, I thought that last year there would be no hike on capital gains tax. It was their entire manifesto that they wouldn't do anything for the working man or woman's tax, but stamp duty, a wealth tax. I mean, how can you charge a wealth tax on something or an investment that's not realised yet? That's absolutely insane.
I know.
And I got fear of a lot of our high net worth and sophisticated investors, not just in this business, but in our country, leaving. We've seen a surge of people going to Dubai, Portugal, these other places, because, yes, there might be ways for them to pay less tax, but they employ thousands of people that all contribute. If they up sticks and move, it's a big problem.
They're taking everybody with them.
They're taking everybody with them. They're taking all that revenue, all that money away with them. So, I mean, for me, I would say that get your ducks in a row before the budget, because after the fact, sometimes it can be a little bit too late. Yeah. But for that one, we're going to have to wait and see.
Yeah, continuing with Labour, mentioned it earlier. We've got to talk about this digital ID thing. Give us your thoughts about this, and we can just talk about it and rant about it a little bit.
Right. So first and foremost, this is my opinion. This is not the opinion of Direct Bullion, whether it is or isn't. This is my opinion. I hate it.
Yes, I mean it's a Orwellian nightmare, right?
It's
me,
an absolute travesty. And it should never be happening. We have this stuff in place with a national insurance number, a passport, a bank account. You need this stuff before you work. And I just don't think that a digital ID card stops the criminal gangs importing people from France into our country. It's going to be a deterrent.
No, it's interesting that they're trying to paint it that that's the reason they're bringing it in. This is hilarious.
Honestly, it's absolutely ridiculous. And we're finding that, Jake, how can I put it? A lot of our clients are types of people who have a slight, not distrust, maybe a dislike in the big brother-esque approach that we find ourselves kind of floating towards. We've got CBDCs for governments on the horizon. We've now got digital IDs. Who's to say we don't end up in a social credit score like we're seeing in China, which for our customers is a big no-no. I would say out of our, we've got a range of different customers, whether it be for wealth protection, tax, growth, safety, all different types of buyers. We're seeing a big proportion of that now come from people that are just not happy with this in terms of digital ID. The fact that the money in the bank is yours, but it's actually not.
Yeah.
Because if we all got up and went to the bank and said, we want our money out, there's only 4% left in reserve. Yeah. The rest is loaned out in mortgages and loans and car finance and whatever else it is.
Exactly.
So the way that our customers are being riled up by this is that it's all coming together. It really does feel like it's all coming together to make it that they have autonomous control, and we are just living in the country with digital IDs, your bank account being CBDCs. That they have the autonomous power. Then, if you don't pay your council tax or your TV license, to take the money straight out your account. And we're finding people are able to combat that with buying gold. And look, it's not just gold. People buying silver, physical assets. Gold's not the only way that you can do it, but in my opinion, it's the best way that you can do it.
It's the best way that you can do it.
It's the best way you can do it because it's something that holds its intrinsic value. It's something that you can easily dispose of when you need to. You can sell the gold pretty much anywhere in the world straight away. And in some places, Jay, you bring your pounds and your dollars, they don't take it. In Moscow, they don't allow trading in euros. They will definitely take gold in Moscow.
Yeah, that's absolutely right. Garry, thanks so much for jumping on the podcast with me today. Really appreciate it. Super informative and really enjoyed it. Thank you so much.
Thanks, guys. See you later. Bye-bye.
Thank you for tuning in to this week's episode of The Bullion Advantage. If there's one thing we've learned, it's that the world doesn't stand still. Markets move, currencies lose value, and uncertainty never really goes away. But gold has been the one constant through it all. Real, tangible and trusted. If you've been listening and thinking it might be time to take a closer look how gold fits into your portfolio, go to directbullion.com where you can download our free guide to gold to learn more. Also, don't forget to hit that subscribe button on YouTube if that's where you're listening, or follow us on Spotify so you never miss an episode. Next week, we'll be unpacking the latest Robbing Rachel report as well as anything else that happens in the next week. So you're not going to want to miss it. Remember, share this podcast with someone who's on the fence about gold. Comment below and we'll answer all your questions in the next episode. But for now, this has been The Bullion Advantage. Thank you so much for listening. The purchase of gold does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your own independent research before making any purchasing decisions.